Hey, Jeremiah. Good to see you again. Thanks for joining me on the call.
Hey, Chad.
So last time we chatted, we talked all things industrial, and a lot's happened in your world since then. I know you've got a 350,000 square foot building that you bought, and you're looking to add some value to it and perhaps reposition it a bit. So I thought we could talk a little bit about that building and get your insights into it. Then we can even just chat about what you're seeing in the market. Interest rates, that's causing a little bit of concern in the markets, upward pressure on cap rates, all sorts of things going on. So love to just have an informal conversation with you, chat about the market. But first, let's chat about this building that you bought. Tell me a little bit more about it.
Yeah. And then just with the context, my company, we focus primarily on self-storage, and that market is pretty competitive right now. And it's a little tricky in the sense of making sure not to get into situations where there's too much supply. So for me, we are aggregating, we're building, we're buying, we're making sure that we grow our storage portfolio. And then, we love the industrial portfolio as a 5-year, 3 to 5 year plus play. And I'm very bullish and excited about all types of industrial, but specifically small bay. But in this particular case in Connecticut, I bought a older building and built in the 60s, late 60s. And it had great bones. And the reason I bought it, though, was that storage play. So it spoke to my fundamental strategy. 100,000 square feet of it was approved for storage. We bought it with about 30,000 gross square feet. We're expanding it right now, getting it to 100,000 square feet. Because it's a market that has some advantages with management, with extra space, we went with it, institutionally managed it, and having that REIT and them our partner on that aspect of it. But yeah, we have 250,000 square feet in addition that we're filling up and finding creative ways to really maximize the value of the property. The challenge is, and what I've learned from your different content is it's built into 2 floors. It's got a second story, but it's built into a hill where you have one area of it where you can elevate it and drive up a ramp into the upper section of the building, and then you have another building built into the lower section of the hill. So the lower ceiling heights down bottom are conducive to storage because you can pretty much easily build it up to close to where the ceiling drops. But for industrial tenants, it's not ideal. So what we're doing is having to get creative around that lower section of the building to fill it up. So where I have now evolved and I'm learning this could be a creative way for me to structure more of these is following the model of this kind of co-working industrial space, similar to what we're seeing out there with some of the bigger players that are private equity backed with Saltbox and Ready Spaces and Workspaces and these guys where we're using somewhat of the storage model in the sense of building more durable walls that are very inexpensive and using some of the technology that we use to build our interior partition walls with storage. And then also dividing up the space where we have a lot of small users that need they don't need 20,000 square feet. So they have a shared loading dock area. They have a hallway system where ideally we're going to have a shared forklift, and then we're going to have hallway systems that go out to shared bathrooms. And then these guys can choose from anywhere between as small as 600 or 800 square feet up to 10 to 20,000 square feet.
So it's similar to the self-storage model in terms of it's a fractional space of the entire building, but instead of it just being used for storage where someone might only visit it once a month or infrequently, there's an actual operating business that they'll be renting small spaces or large space. So it's a similar type of concept, just what's happening inside is a little bit different?
Correct, that's it. And we provide power to the site. We have roll-up doors. It's a secure area. They can build out a small office. We can provide a small office, but for the most part, yeah, it's exactly right. It's warehouse space that they can utilize for on-site operations if they're packaging items, light manufacturing, obviously storage and warehouse, and really holding materials where some of the contractors there that are starting to move in have ideal enough parking in the back. They can store their supplies, move them in and out. And, the highest desirable units are the ones that are closest to the loading area, but we're trying to find ways where we can get creative to make it conducive with the hallway systems. And this is where I'm just still learning, where that we can get people, easy access in and out, especially when they're getting supplies for either at the grade level door or the loading dock door.
What was the previous use of the building before you guys bought it?
So it was Hallmark greeting cards. They were, a greeting card distribution manufacturing plant.
So they didn't need the higher ceilings for their either the production or the assembly or whatever they were doing. That's often the case. Is that a lot of the times the building is built when it has low ceilings like that. It's built for a specific use, and it's funny because I've been involved in one where it was a beautiful building, perfect setup, the 20,000 square foot building on 2 acres roughly, which is a unicorn in most markets to find a building like that. The company that used it with their health and safety company, so they didn't need higher ceilings when they built it. So they built it with 14-foot ceilings. So an absolute beautiful building, diamond in the rough, but that ceiling height was so prohibitive for the next group of users that was going in there. And we ultimately sold it to a roofing company. And they just didn't stack their stuff very high. Whether it's a fire issue, perhaps you can't stack that certain stuff beyond a certain height, or they just didn't care to. They saw all the other attributes. But there are users out there. I have found that there's a lot of users out there that can still take advantage of that low ceiling height, but often they look for a discount on that. So question on how you're looking your rates, and it's a kind of couple of things that come to mind on this, because you're also having to put in a lot of common corridors into the warehouse to accommodate that common area where everybody has a maybe a right of way or just a passageway. So you're losing a lot of rentable space. So I have a few questions that come up because this is very interesting to me. Do you have to gross up the space that you're renting up to include that common space, or are you charging just a premium on the short-term space? And then how do the rates reflect what you would have been able to charge if the ceiling heights were higher and there wasn't the challenge that you have to deal with?
Hey, you're spot on with that. So a couple things that you spoke to. Number one, because of the lower ceiling heights, we do discount the rates. The building's in great shape, luckily, with ceilings, lighting, flooring, everything's really, really clean. And that's one of the reasons I moved forward to buy it. In regards to that, we are charging. So the way I'm structuring it is signing a master lease with myself. So 100,000 square feet up to is the master lease of the co-working space that we're designing. And we're building it out in 25,000 rentable square feet increments. And that's going to get us roughly, I think, around that 70, 80, 85,000 of rentable square feet, depending on how we lay it all out after we build out all the interior partition walls. And we are charging if it's a 20% load on the CAM, there is an additional charge on top of the base rent. So our smallest divisible space is around 650 to 700 square feet because of the columns. There's these massive concrete columns, and that's how we're going to break up some of those divisible units. And yeah, so they're going to get around 700 square feet rentable, but they're going to be charged for eight and a quarter, or somehow a CAM fee on top of that to recapture some of that common area. And then our rates, in terms of that, our base rate on the entire building for us to hit our projections is going to be right in that $4.50, $4.25 to $5 gross. So it's really, really cheap annually.
Yeah, no kidding.
But on the storage side, because the way the economics of the deal work, our gross storage rents are in the $13 to $15 rate, depending on whatever we finish up on our unit mix in terms of small or large units. So the storage business drives in a lot of revenue for the space, and that's why we all love storage. But it's slow to lease up, and it takes time, and the tenants move in and out. And then secondly, the users that are in the co-working space, we're looking at, depending on the strength of the tenant, the size that they're going to use, and then the length of the lease, which we don't mind. We like year-to-year leases and month-to-month after that. We're looking at roughly anywhere on the low end between $8 up to $15 on their rents, depending on how small of a space. So there's a good premium that we get for dealing with that smaller non-credit tenant in the short-term leases, and we give them that flexibility as they grow their business.
Very cool. A couple more questions I had as you were talking about that. So if you were to split off, call it a 700 square foot spot, are you putting up chain link fence or an imaginary party line, or how are you actually demising that space so they know what's theirs?
Yeah, I'm digging, and I'll get you real material cut sheets and lists if you want, because this is something that's not very available. It's kind of on the inside where you see the ready spaces and salt boxes and stuff. And one, they don't share how they put those walls in. And two, you go to a contractor and they're just going to slap on a huge premium and they're going to give you some beefed up wall system that you don't need in these cases. So I was with my construction team yesterday, and you met Tim last time. So the way that we kind of nailed down how we want to do this is the larger partition walls that are going to be the hallway systems, they got to be beefed up a little bit more because, you might have a forklift run into them, or people are going to get pretty aggressive with, you know how industrial is. So that is going to have it's kind of like a racking system where we're going to have it drilled in 3.5 by 3.5 steel racking poles that are going to come up every 4 to 8 feet. And then we're going to put on the same walls that we use in our storage partition walls. And they're those white, nice, clean, I don't know what they're made of, if they're aluminum or steel, galvanized steel. But they're just panels that we put on there. But it's going to be more of a reinforced system with drilled into the ground with something like a racking pole. And then our partition walls are going to be a lot less. They're going to be not as heavy duty. And those are going to run, within those partition walls to divide up the units. And those are going to be like typical self-storage divisible style walls where it runs laterally and we affix them to the sides of our poles. And they're going to be light gauge steel, the same stuff, or whatever, not light gauge steel, like a aluminum type wall or whatever we use for the storage units.
Very cool. Yeah, I love how you're taking what you're already an expert at and just applying a lot of it to this concept. I find this very fascinating. I have more questions because I'm legitimately curious about this. So insurance and contract comes to mind. The contract we'll get to in a second. I'm just curious how you actually structure these leases because it might only be in there for a month, or are you even looking at term leases? Let's shelf that one for a second because I am curious on how you're structuring these leases. But what does insurance say? Because I know from my experience with properties that I've owned is that every time you change a use, you're changing the way the insurance company is looking at that building and how they assess the risk. So if you had a traditional just storage company in there and all of a sudden you decide to put in a trampoline park, that's changing the risk profile of the building. Insurance company is going to want to know. Do you have to update your insurance company every single time you change a tenant in there, or what? How does I'm just general, actually, how are you dealing with insurance? How do they look at this? What do you have to do on an ongoing basis, or does it even change at all?
So what we're pushing on, and we're finalizing this right now, and this applies actually to the same area with the town permitting as well, is the master lease tenant, the company, that the all-purpose commercial LLC, our master lease, which is the operating business that's going to be signing the leases with each of the individual tenants and signing the master lease with the large building. That's going to be the entity that's insured, and that's the entity that's going to be permitted by the town to do business as this co-working space use. And so far, the town has approved, as long as you have this bandwidth or this scope of uses within your use, you don't need to come back and get a permit every time you have somebody occupy the space. Now, we have to enforce in our leases that they go in there and they go apply to get a business license in town, and that's between them and the town, and it has nothing to do with us. And then on the insurance side, we're pushing for the same. So here are the scope of uses that we are going to have in this property, and we'll limit it to certain uses that won't be available or allowed. And then at that term, get a master policy around that. And we don't know. I'll keep you up to date, but that's what the way I want to simplify things, to keep one insurance policy and one use permit for the town with the master lease entity.
Yeah, I'm glad you touched on the permitting because that was another question I was curious about. And every municipality is going to treat it a little bit differently. So I'd encourage anyone that's considering doing this to have regular consultations with your municipality to see if it is going to be a change of use or a more expansive policy or permit that's required. It sounds like you've already worked through that and have peace of mind about that. But I know in my city, I think it'd be very challenging dealing with our development department to actually work through some of this stuff. It has been done. There are a few smaller ones that have done it. Nothing at the scale you're proposing, but I'm glad you touched on the permitting. And to the previous point, anything that you can share that you're comfortable sharing with, I'll either overlay it as we're talking about this, any of the plans or pictures, and I'll either direct them to you or direct them to your website. We'll find a way to share that with anyone that's interested, what you're comfortable sharing. But onto the leases, though, because this is, I'm curious about this, and maybe as simple as you treat it the same way you treat someone renting a storage locker. But if a company does want to come and set up operations, and it must be more complex than just storing household goods or paperwork in there, because you're having an operating business. Mm-hmm. There could be liability issues, there could be environmental issues. How short of leases are you doing, and how are you dealing with a lease that's a lot more complicated and just takes more time to implement?
So we are creating a master template on that lease, and that template is going to, I think it's between 5 and 10 pages. We're wrapping that up with our attorney now. We will get each individual state attorneys to give us the final blessing on it. This particular building's in Connecticut. With that being said, it's very similar where you have the term, you have the rate, you have the common area expense, and of course you have the rules, you have the what are violations, how to remedy the violations when they're in default. So for me, it's not that complicated. Where we underwrite the tenant, where our big challenge is getting the marketing out there, making sure that we drive in a lot of awareness, because there's not a lot of this product out there. The big leasing guys don't want to deal with it. The really small leasing guys don't have the bandwidth or the capability or understanding to deal with it. So we're trying to generate this marketing arm that exposes small businesses geographically to the product, and then we want to make it as easy as possible. I mean, we want to make it where, like you said, it's as short as, ideally we'd like a 1-year lease, and that way we know they're committed to a year and they're not just in and out. And then in the sense of, helping people, there's really not a lot of concessions we need to make. We'll give them maybe a little bit of free rent if they're going to sign a little over a year lease. But for the most part, it's plug and play. If they need power, we're going to have that available. There's Wi-Fi available. They will have to show their insurance paperwork. It's more work and communication with the property manager, and you want to make sure that if you're property managing or that you have a staff member dedicated to that they're going to have to apply a lot more effort to onboarding the tenants, because you do this already with your bigger tenants, but you're going to be doing this at scale, right? There are going to be 20 to 40 tenants in this space or more. Mm-hmm. So but to answer your question, for me, it's about ease of the process. I want to make it very simple. First and last month's rent. What are you doing in this? Give us a bank statement. Give us your last year's tax return. If you don't have a existing use in this business or existing track record, we're gonna cause to have a larger deposit, maybe 3 months. And I want to get them in there operating as soon as possible. We'll see how it evolves. I haven't done it before either, so I'm going to see how this. But my goal is to help small businesses get up and going, get out of the house, get a good operating track record. And really not try to complicate it for them, giving them a blueprint that, if you get your insurance paperwork and you'll get your business license, I'm not going to slow you down. You're going to get all the support from me I can give you.
It's really a brilliant business model, especially for you, where you've got the capacity to even to add more inventory. And I'm sure that's just part of your company's goal, is to just keep growing and adding more inventory. You're almost creating like a little incubation center for these companies where, like you said, they can come in, they can start building a track record of leasing commercial space. They can show that they are an actual company now instead of working out of their garage. Not to denigrate anyone that's working out of their garage. So you got to start somewhere, but now they're actually in a commercial space that should help them grow to the next level, and you can perhaps even provide them the next space. So you're giving them a spot and then unlimited potential to essentially grow as you could accommodate that. So I think it's a really cool use on that. As you've been going through this, what type of tenants have you seen that are interested in it, or that you've already talked to? Yeah,
we have a lease we're signing. I mean, a lot of pallet companies that, for some reason, with pallet distribution, they don't need the really high ceilings. And this was in addition where we were able to build out 20,000 square foot spaces that are in other sections of the building. So we gave them the dedicated entrance, and that's been very helpful. Also, there's a hardware supply. For some reason, they didn't need the high racking, so it's just a local hardware supplier where retail space was too expensive, and they were able to use our space that was quite cheap and keep supplying their retail warehouse with current supplies and materials that they can sell, inventory. We have a couple, automotive's a big use that we don't allow in this one, but we have a lot of demand for it. And I do want to crack the code with providing, like an automotive business park, but it doesn't fit for this particular scenario. We have a couple small users where Amazon distribution, where they're not using drop shipping, they're doing their own automotive parts out of here and distributing them to their customers themselves, doing all the mail and shipping out of our location. We have a couple contractor guys that are right now interested, siding, painting, some of these guys that are just going to be holding materials and parking their trucks, because we have quite a bit of parking there. We have a couple hundred spaces, and it's not going to intervene with any large loading from the front of the building with some of the tractor trailers.
Cool. Yeah, I've some of the other ones that I've come across that love that. Contractors, like you mentioned, is a big one. So like plumbers, electricians, anybody involved in home improvement, small contractors that might do TIs or something in buildings where they just need the ability to park a vehicle, which isn't always accessible in self-storage. So like their options are very limited. They try to cram into self-storage, which often just doesn't work for any type of operating business. They continue to do it at their house, and that can only go so far because you can only get so big inside of that small little goldfish tank. So your other options are to lease a small bay, like a contractor bay, where you're leasing 3,000 square feet. You probably need to do a term lease of 3 years or up, and you're committing to that. So this option works really well for a lot of these small companies that just frankly don't have any other options.
Right.
How are you marketing to them? Because it's also a tough one where there's not a lot of people that, like, it'd be hard getting a broker to represent someone to lease a 700 square foot bay on a 1-year lease. So how are you finding these tenants, or how are you marketing to them?
Yeah, it's tricky. This is what I really want to develop. We do have actually an appliance salesman and appliance repair shop too in there, which is odd. But what we're doing is building the system right now. And this is where I think the secret sauce is made, where if we can get on Facebook, if we can get on Craigslist, if we can also get on the traditional sites, the Craigsies and LoopNets, we don't get a lot of exposure to the small business person. That's really the brokerage community, but we're targeting direct marketing geographically on some of the Facebook sites, the Instagram, the different Facebook Marketplace, anywhere where we can get eyeballs with local community business owners plus signage. That's where we really want to get out there. And I'm doing outreach marketing as well. I'm doing active marketing, not passive campaigns. So we're doing voicemail campaigns. We're doing letter campaigns. We're doing email and call campaigns with some of my staff to some of the community around there. I don't know what's going to work, and obviously that's not sustainable for me to scale at this time, but I'm trying to learn what's the best way I'm going to get exposure to these owners of businesses, and that maybe even local publications. There's still a local newspaper in this region. But I think social media is going to be the ticket, Chad, and it's going to be getting their name on a wait list, and it's going to be getting a nice, easy process where I can get testimonials, or a seamless process of, this is how we give examples. This is how this gym moved in. It was as simple as 1, 2, 3, and we got them in there with customers, or this contractor got in, and really building up that social media visual image of, this is how you could get your business in here as well.
Yeah, I think that's a great idea. To manage this, which would obviously take a lot more than just a traditional industrial building, do you put somebody as an on-site property manager, or do you still do this off-site?
Yeah, luckily I found a local property manager that specializes in this. This is a weird evolution where I was pushing on brokerage, where we're with a traditional broker with the building, but I needed to really force myself to be innovative. And there was another leasing agent who specializes in co-working space throughout Connecticut, a younger guy that's sharp and hungry. So yeah, we really are kind of developing this system together. So he's not on site full time, but we do have him and his assistant going out, running, doing site visits, showing he's close to the property. For me in the future, yeah, if I'm going to scale this, you're definitely going to need one person that can either be on site, or there's some type of lockbox or maintenance man, some type of access to show the space because that is a limiting feature where you're going to need to have those that on-site presence to actually get the look and the feel of the space in order for the tenant to make the decision.
Yeah, that makes a lot of sense to me, and I'm sure your leasing broker is probably doing a lot of stuff proactively as well. One thing that came to mind as thinking about that is a lot of brokers won't run with a 700 square foot tenant, but they probably would love to refer that off. If for no other reason, that's just the right thing to do. If someone calls and they're looking for a 700 square foot spot on 1 year lease, instead of just getting off the phone, why not just recommend you guys and just say, hey, here's a great option for you. Reach out to these guys. And then at least you're helping somebody along the way. So I would think that for myself, and because I get calls like that, not regularly, but I do get calls like that, and I don't have anywhere to recommend them. So for me, it'd be very simple to just say, go check out these guys. They've got options. And then if you were to catch wind that it came from a broker in that market and you sent them a little gift card, you know that they're going to refer you every single time that a need like that comes up. So yeah, I love the idea. I think this is a very fascinating way to do it. And anything that you can share above and beyond that would be great. I'll try to either include it in this video or include it as a link. Anything else that I'm missing, or any challenges that you're having with this, or any room to continue scaling this and do it with other buildings that there's problems with, or anything that I'm missing on this?
Yeah, I think how we can add value to others, and through my experience, with this being forced into this strategy because of the storage strategy that I'm working on, and the investment will be successful just on the storage alone. But learning this and understanding this could be a great value add for everyone out there that wants to repurpose older industrial space with lower clear heights. I think sprinklers are obviously a concern. So you want to keep that exposure from your demising walls, below the ceiling height, and still keeping it under whatever the recommended code is, so that, yes, you are going to have, the visibility if someone were to crawl up and get into the other person's space. That is a possibility. But, with the price that you're offering and with that disclosing it up front, you should be able to alleviate that requirement that if the building is already sprinklered, you don't have to do any major TI or CapEx upgrades to the building in order to make this, business plan work. Secondly, for me, I like this model, but I'm just as bullish or more bullish on the small bay flex space. If I could do it all over, I would really, and I am doing it all over. We had an episode about this that's, where we're finally wrapping up that other development and doing 4 more, is the small bay industrial warehouse where you're building metal buildings or tilt-up concrete buildings where each person has a demising wall, and they have an office, and they have a bathroom, and they have their roll-up door, and that's really more of the traditional small bay flex space. I'm very bullish on that in the future, and I have a lot of ideas where I want to incorporate, the shared loading dock area, which you can do here too. If you don't have a loading dock, you're gonna want that, because more and more small users are getting, they're very flexible with the type of businesses now that on the space demands, and if you don't have that loading dock, it's going to limit whoever your tenants are. So coming up with a few shared loading dock ideas, and then also, sharing the costs that are involved. So, right now, we can share it in here with you, and we're going to finalize this. Our construction's literally starting next week in terms of the second phase of a lot of our interior partition walls. We could be at $200 a linear foot. We could be a little bit less. We could be a little bit more with materials and installation. And then, that's a brand new aspect of this for us. But I think as we get better at it, and because we have direct connections with our manufacturers of our steel, with them building our small bay industrial buildings, giving us the kits and we're erecting them, or building our storage sites, we're going to get this dialed down where we can really offer to your guys' customers, hey, don't go to the guy that's, selling you this package and the contractor that's making it complicated. Go to the storage manufacturer, ask exactly for this wall system or this racking system, put them on this way. You can use erectors that traditionally do self-storage, and we can cut the cost, I think, in half as we refine this over time.
Yeah, and what I love about that small bay inventory as well is that's been relatively fixed for 30
I know.
years. There seemed to have been a boom in like the
Oh, I
80s,
know.
early 90s where that inventory came up, but for the most part, industrial development has been big box. Like
I
you've
know.
seen very little of that small bay inventory, whereas the demand has still been very healthy. So I think you guys are tapping into a great market, especially if you can do it at a fraction of the cost of traditional construction.
Yeah,
That
yeah.
yeah, very interesting.
It is. As you're seeing the public markets evolve too, and I know you get big players, Prologis and a lot of different people on this show. The main thing I see is the REITs or the institutions, they're specializing in their niche. So you look at public storage, and like what you said, right around the late 80s, early 90s, they evolved into buying business parks, and that was a traditional, some flex space, and then a lot more flex business warehouse space. And they grew that portfolio over time. And then now you see they sold that off to Blackstone, and they acquired that at a great valuation. But Blackstone feels like they're coming in the market at the right time, and they can add value, obviously, because that's what they do with their real estate funds. But then at the same time, Blackstone sells Simply Storage right back to them, and now they're like, we don't do the storage the best in this aspect of it. We made a good profit. We aggregated. Now we sold back to Public Storage. And you're seeing that from other angles. So for me, my thesis is, right now I'm scaling storage. I know where the big players want to buy storage, and the best players that do it, better than anybody in the world in the public markets, they just want storage. They don't want parking. They don't want commercial. They don't want industrial. They don't want any of it. Give them storage, get the highest rent per foot, let them operate it the best way they can through all the marketing and all the leasing and the operations and service. And then me, having a 3 to 5 year horizon, refine the small bay model where it's either the co-working space and warehouse or the small bay industrial construction or revitalization or repurposing or improving, and then scale up that portfolio where I think by the time I get to some critical mass, 1 million or more square feet, I'll have, there'll be more of an institutional model that would like that. Like now we'll take your diversified stream of income because we like the waltz that you guys talk about there, having that weighted average lease term where it's a lot shorter and it can keep up with inflation. And for me, I believe I'm ahead of the curve, and I'm going to push really hard to learn how to scale this business on the coattails of my core strategy of storage, of getting to the finish line and exiting that portfolio.
It's going to be exciting just following along with your journey, and we're going to have to continue having regular conversations about this because I think you're in the game at the right stage and you've got the right strategy, and I'm sure you're going to implement that. So we'll keep chatting about this because it'd be fascinating just to follow along with what you're doing.
Thanks.
Wrapping up, 'cause I've sorry to cut it off. I feel like I could talk to you for another 3 hours on this, but I got another call in 10 minutes. Yep. What's your overall take on the industrial market right now, and kind of not just right now as in like we're summer 2023, but what do you think the rest of 2023 looks like, and then what's your forecast going forward?
Yeah, you're the guy that talks to everybody. So I have my individual niche that we talked about that I focus on, the small user. We do have that one large project we could talk about in Methuen, Massachusetts, where we're leasing to 1 or 2 users that are 150,000 square feet in the Boston MSA. And that's exciting, and that's traditional industrial, and that was a strategic joint venture with the landowner that I bought their storage from. So that's built on spec, and I would love to exit that, and that's more of that traditional game, and I'll keep you up to date how that goes. So in terms of that user, I'm seeing them be a little more price conscious in my market because it's very market driven, as you know here, and it's very business driven in terms of the type of user. So for that, I've seen a little bit of a slowdown in terms of the specific users wanting that space. But I don't know. I don't play in that game like you guys play. So we're getting a lot of activity. So as soon as we sign that lease, I'm super happy, and we just scored a huge home run. But for me, what I really focus on is the small user, and what I see in that space is exactly what you said. Is 30 years ago, really no new product has been developed. Office has completely transitioned, where a lot of those buildings are not functional in this day and age for some type of quasi-flex warehouse use. So there's very little supply. I believe that the end user needs warehouse. They need a little bit of office space. They need flexible use lease terms. They need a very competitive lease rate where traditional retail on a service road is going to be too expensive. So the small user is perpetually undersupplied. So for me, I don't think it's going to change. It's how do we disrupt the market so quickly where we can skip the middleman? I hope I don't piss off too many brokers, but I don't even think they want to do it anyway, right? They don't want to do it. Skip the middleman, right? Get directly to the business owner. You probably know the stats, and you have some cool stats on your channels. Whatever it is of the entire population that's employed by small businesses, if it's 60, 70, 80% of the entire country are entrepreneurs or employing other workforce, that to me is the future. So I don't think there's a blip in demand. I think there's a tremendous wave of demand that we haven't even tapped yet because we need to innovate in this area of industrial.
I completely agree. It's I think at the larger scale, there's probably going to be some pressure. I mean, the feds are manufacturing the pressure, so we can't even deny that there's some economic pressure when that's their mandate. But on that small side, I couldn't agree more. There's a lot of demand, especially as some companies might have to downsize or cut costs. All of a sudden, a smaller space looks that much more appealing.
Yeah.
And the inventory has been relatively fixed. So I agree with you. My favorite properties in my own portfolio are small bay industrial or flex. I love it as well. So I think it's important to have more conversations like this because what dominates the headlines and even what I bring a lot of guests on are talking about massive $100 million portfolios or $1 billion portfolios that are all big box industrial warehousing. And that's what gets a lot of attention, especially in the news. You hear about Prologis, but this small bay industrial is untapped. And I think that there's a big opportunity there. So I would love to continue the conversation on this. So we'll touch base in the fall here. We can do another follow-up and maybe talk about the one in Massachusetts as well. To end on, I'll direct people to your website, Patriot Holdings, and to your LinkedIn. Encourage people to reach out and connect with you. Do you have a website for the one in Connecticut that's dedicated if anyone just wanted to check out how you're marketing these?
Yeah, I'm building the brand now because we have all-purpose storage. That's our core storage brand. We're playing off that, and I don't know if we're going to stick with it or not, but it's allpurposecommercial.com. allpurposecommercial.com. So yeah, we'll see how this evolves, and there's a lot to learn. So the management software, the management terms, the lease. I mean, we could do this for a long time. So I know we both got to cut out, but I'm excited to watch this evolution, and I think that you and I are onto something in the sense of this empowers the small investor, the small property investor, and even the small operator in their business to start to scale into real estate investments. Because if you can use whatever business you have or whatever skills you have to help translate and manage these type of spaces, it's a lot more obtainable and sustainable than opening up some other heavy, intensive labor operating business. I mean, it is a business, and it's not, but it's one that if you're interested in real estate investing and you have another skill in real estate with leasing or in operating a company in another service-based company, I think this is a great transition for us to help everybody go to this space.
It excites me. You got my wheels turning about even looking at a building and doing this in my market because I love everything that you're doing with it. So let's touch base again in the fall, and I'd love to just continue this conversation because I love the passion and energy and just how excited you are about this, and it resonates with me. It gets me excited as well. So really do appreciate you jumping on this call with me and talking about that development and the market, and look forward to keeping in touch.
Yeah, Chad. And if they want the story, I wrote that book. The Audible comes out next week. So it's Finding Your Edge. It's the book there, How to Win at the Game of Commercial Real Estate. I narrated the book. I put a lot of time into it. So a lot of people ask, hey, how do you invest, or what are the strategies or tools? And that's it, man. I put it all out there, and I'm glad I did. It's done.
So I'll probably put this out next week. So the Audible will probably be out by then. So I'll make sure that I include a link to that, and I look forward to downloading it myself because I'm in need of a new Audible book. So perfect timing.
All right, cool.
Okay, thanks again, Jeremiah.
All right, buddy. See you, Chad.